Hi guys, welcome back to our weekly trading forecast for the week of 7th of September to 11th of September. So my name is Dylan and over here we have JJ. So as usual, let's kick off with the dollar index. All right, so as we know, last week we have the NFP, and after which I think let's talk about what happened to the dollar last week. So this is the day chart. As you can see, the dollar is actually coming back pretty well from a low. The previous week before last week is that it actually went down even lower. It fell even further. Completed a similar volume of a bearish trend as this one right here, but after that it did make a very strong comeback, and right now it is still closing lower than the previous high, so it's still a slightly lower high, but it is currently right now unsure whether the US dollar will still be able to continue to climb and probably create a higher high this time round. All right, but I think let's maybe talk a little bit about the NFP, the data for the US and how it has affected the dollar index. So one thing about the employment change is that I think the figure is very close to the forecast, although it is lower than the previous NFP. But however, it is. I think that is normal because of the recent rise in the US COVID cases in in US itself. So that definitely should have dampened the employment markets in US. And another good thing is that the unemployment rate actually came down close to 2%. So I think overall it is a good sign for the US employment market, and therefore it is actually good for the dollar. But anyway, what happened is during the data itself, as the data was released, prior to the release, okay, so when the data was released, we do see that the US dollar actually continued to climb even higher, but started to came down again and wipe out all the gains after the NFP. But however, it still found support, and currently we are seeing that it is starting to climb again. So I think that reflects a positive tone for the US dollar, when it comes to the NFP last week. So looking at the day chart again, okay, one thing that we want to take note of is that the dollar, technically speaking, is definitely oversold, which is why we have seen the dollar index has fell into the range ever since 31st July. Late July or beginning of August. It fell into range, however, still going down a little bit lower. So another thing is that we want to also understand that this is currently the third bearish wave, a third major bearish wave has ended, and after which went to range. So given the current situation, I do think that the dollar index is pretty much about time for the dollar index to make stronger rebounds, stronger pullbacks as compared to the previous one that we have seen. So back all the way to the 4-hourly charts, in fact, I think there is already some form of some signs that's telling us that the dollar index might start to climb even higher. And one of it is that in the 4-hourly chart, we can see that this trend line right here, technically speaking, has been breached, not entirely broken, but as I think from what we can see right now, it does seems like the break is going to come very soon. So this week, I think for the dollar index, I'm pretty much more bullish bias. Otherwise, it is most likely going to range ahead of the FOMC statement, which is next week. So this week could be ranging, or we might see the dollar start to climb prior to the FOMC statement. All right, so that's for the dollar index. All right, so back to the euro against US dollar, this week we have to definitely take note one of the most important news for the euro. Yeah, we have the ECB press conference on Thursday, right? Same time, 8:30 p.m. Of course, it's refinancing rate at 7:45. Most likely unchanged for now, but definitely that's something we want to watch out for. So, I mean, if we are trading euro against US dollar, but anyway, the fundamental for the dollar, as spoken right now, is just technically oversold. So I think there's a good chance for the euro against US dollar to make stronger pullbacks, forming a stronger bearish trend in the shorter time frame. So going forward, I think levels that I will be watching out for. So this is the current downtrend, the current bearish trend. Here are some levels you want to watch out for. All right. Number one is definitely if when the price starts to push back, obviously there's quite an obvious supply zone right here. All right, so this could be the first level, and of course I will take note of the previous resistance right here, right before the price actually break even higher, a fake breakout, and then it came back at 1.1946. So in short, I think from the price of 1.19 all the way to 1.195 could be the area that we want to find an opportunity to sell. But there's always a possibility that this range, that if the price is not able to break out of this minor range right here, right now, it may just continue to fall before it make any further pullbacks. So that's something that you want to consider. Which also means to say, if let's say when the price comes back to the top of this minor range, you may also consider trying to sell at this level if there is, I think, obvious sign of a reversal and continuation of this bearish trend right here. Otherwise, what you want to wait for is for the price to break below the, this entire range, this entire rising channel, okay, which I consider it as a range in the bigger time frame. Once it break below, there's a confirmation. Hopefully, it can break lower. I mean, creating a lower low, okay, rather than right now it's still a higher low. Then from there, you can wait for pullbacks again, and then you can try to sell the euro against US dollar again. But however, the bigger picture for the dollar, which we know that the FOMC the Federal Reserve is still going to hold rates, interest rate low, near 0%. So I think for the bigger picture wise, dollar will still eventually weaken. But I think just for the short to midterm, right now there's a very good chance for the dollar to make a pullback, a rebound, and before it actually continues to fall deeper. All right, so that's for the euro against US dollar. And next, I would like to pass my time over to JJ to share his trading plan for the week.
First we have here is pound dollar. So let's start on the weekly chart. We can see that as of last week, when price came back to this key interest level, you can see every time price came near this level, it got resisted. So once again, this weekly candle, it formed a long wick candle showing resistance. And we can see on the day chart that after it formed this resistance here, it was a very long wick doji candle. Price started to come down, even gapped, and on the 4-hourly time frame has now broken this trend line since trend line starting 30th June. So this week, I'll wait for back to this level, then I think that will be a good price to enter. Because you can see that on an even smaller time frame, when price broke, it came back retested, and now it's being supported at the previous low. So I would personally wait for a break of this low and a retest before continuing to sell the pound dollar. And next we have dollar CAD. Similarly, dollar CAD, last week it formed this candle here. at this demand zone before forming the first green candle since July. So on the daily time frame, you can see that price came down here, hovered for 2 days, and now has found support. And this previous trend line, just plot one on the smaller time frame, we can see that every time price came back to this trend line, it broke, it created a lower low. But this time round, it came up, it got resisted, but it couldn't form a lower low, and instead is now rising. So two ways to trade this. One, there are two possibilities. If price starts to range from here, then we could enter at the bottom of the range. However, if price does break above this current trend line, then we could wait for, if price breaks above, we could wait for a retest back to the level of breakout before buying dollar CAD. So this will be my two pairs to focus on buying dollar.
All right, thanks, JJ. I think I want to touch on a little bit on the pound against US dollar. All right, so for the pound against US dollar, maybe you can go to the monthly charts. Just zoom out a bit more, so we can see the highest price. Yeah. Okay, so but this is quite personal when it comes to how we plot trend lines and stuff like that. So yeah, if let's say, right, so if let's say JJ were to shift it into this manner, so it depends how you see it. I mean, for myself, this is how I actually plot the trend line on the month chart, which actually shows that the pound dollar has reached the this falling trend line once again, which started out since, if I'm not wrong, that's 2007 all the way up to now. So that is like 13 years already. Yeah, exactly, about close to 13 years. So we saw that the price touches the trend line and actually started to reverse. And if you go all the way back to the daily chart, the daily time frame, all right, the recent rise, or rather the recent bullish trend, right? If I were to take away, right, if I were to take away the most bearish trend, the most bearish trend that it fell and break through, yeah, if I were to wipe out, or like, I mean, ignore this part itself, and I take the first bullish wave, starting from June. Yeah, somewhere right here. Yeah, just the previous one.
Huh?
Yes, correct. This is the one. Yeah, if that is the first wave, okay, you can see that that's number one. So it pulls back. Number two, and right now it is going for the last wave. And as it reaches the top, and as JJ has shared a very key interest area of interest, and it started to reverse pretty strongly. And aside, I think apart from it, on the fundamental side, I think British still facing a lot of issue with the Brexit deal, which I think right now they're still in the stalemate, still the same issue. So I think that is going to weigh on the British pound, and of course the fundamental that I shared about the US dollar in the short and mid-term, that most likely is going to make a strong pullback, a strong rebound. Pound dollar seems to be a very bearish pair for us to sell at the moment. Yeah, so that's something I just want to add on. I have the similar view as JJ that the British pound is a pretty good pair to sell as of now. And what he shared about the break of the trend line in the 4-hourly charts, that's something which is pretty important as well. So yeah, that's just my additional opinion. All right, so let's come back to my charts. All right, 2 more to go. All right, next is the gold. All right, so the gold, as we know that ever since it reaches highest at 2075, came all the way down, a very strong sell-off. But after this sell-off has ended, the gold did not continue to go lower. It has actually found support at the very previous 9-year high at about 1,920. or 22. And up till now, it is still being supported, although the price has been, I mean, the high has been creating lower highs, but the low are also creating higher lows as well. So it is a very ranging market right now. And I think as of now, we still don't have a very clear sign of whether the gold will continue to rise or fall in the short to midterm. But in the long term wise, definitely I do think that the gold still has a lot of potential to climb even higher, all the way to, I don't know, 2002, 2003, even 2005, or even higher. That's always I'm always open to that possibility. But right now, I think in the ranging markets like this, I think we can always look to buy at the range bottom, or look to sell at the range high. So right now we can see that the dollar, the gold is still supported at the previous 9-year high, or rather the major support right now 1,920. We can definitely wait for opportunity to buy the gold again. I think given the current chart pattern that we have, the first thing is that this entire bearish wave, all right, in the 1 hourly chart, right, there's like 1 wave, 2 wave, and 3 wave completed, and the price went into a range right now, found support, and buyers came in, started went higher, got registered at the top right here. Although it did not create a higher high, but it is essentially an equal high based on the closing price. So if we were to consider this current wave, right, as the first bullish wave for what's going to come, then right now the pullback is something we want to watch out for and see if there's an opportunity for us to buy again as the price reaches this level, or rather this zone right here, which should be 1,926 to 1,922. All right, to buy the gold again in the shorter time frame. All right, definitely a good try. So, and if let's say that it really start to go up, I think this definitely forms something very similar to an inverse head and shoulder. So that's what you can watch out for. That's what you can do for the gold. Or you want to wait for confirmation as it breaks out of this range, then you wait for the pullback and continue to buy the gold thereafter. So very straightforward for the gold. I think in order for us to have a better clue of how the gold will perform, eventually, is only after next week during FOMC statement. And of course, we can definitely find some clue during the ECB press conference this week on Thursday. Next, last but not least, will be the US 30, the Dow Jones. All right, so the US stock market, as we know, has continuously climbed despite a lot of news or whatsoever it is, doesn't matter. We have seen the Dow Jones, the US stock market, just climb. I think mostly due it is based on the tech shares. So, but last week it finally came down. It finally fell the biggest since I think somewhere in June, where the US COVID cases suddenly rise, and there's a very huge sell-off for the Dow Jones. And although the magnitude is not as big as back then, but I think it is definitely significant. And as you can see, it has also completed 3 bullish wave right here. So that marks the end of this entire bullish trend. And I therefore believe that there will be more sell-off going forward. So what we can see right now is in the 4-hourly charts, all right, there's a technical break of this trend line. So a confirmation, price does pulls back and continues to fall. So I think as of now, we just want to find out which are the levels or area of interest that we can actually look to sell. And at a glance, I think this is a pretty good level for us to watch out for. Okay, so which means to say when the price pulls back into this zone, around 28,500 and 28,600, 600, I think that would be a very good level to sell all the way to the 1 hourly chart, right? Based on this falling trend, if we were to wait for two waves of a pullback, then it should look something like this, and then it will come back to this area of interest, and then that's where we can continue to sell the Dow Jones. Definitely, I'm still looking at a small to mid time frame. Another thing that is always on my mind is whether there will be a second sell-off for the Dow Jones, which right now this could be a possibility. That could be it could open up the possibility, but definitely still something that we want to observe more before we make the decisions. All right, so that's for the Dow Jones, and with that, we have come to the end of today's weekly trading forecast. So thank you so much for watching, and we will see you again the next week.